What if I told you there's a signal hidden deep in the financial system that has predicted every major economic collapse for the past century? A signal so reliable that when it appears, what follows isn't a question of if, but when. And right now that signal has just done something it hasn't done since 1929, the year the world changed forever. Let me introduce you to the yield curve. Don't let the boring name fool you. This simple chart has been the most honest predictor in finance for over 100 years. On one side, you have short-term interest rates, the cost of borrowing money for just a few months. On the other side, you have long-term interest rates, what investors want to earn if they lend money for 10 to 30 years. Normally, this curve slopes inward. Why? Because the future is uncertain. Lenders want more money to wait longer. That's healthy. That's normal. But sometimes something strange happens and the curve flips upside down. Short-term borrowing becomes more expensive than long-term lending. Suddenly, people would rather lock their money away for a decade than lend it out for 6 months. That's called an inversion, and it's the most accurate recession predictor that we've ever found. In April 1928, the yield curve inverted. Nobody paid attention, and the economy was booming. The stock market was unstoppable. It was in the roaring 20s, and everyone felt invincible. After the inversion, stocks didn't crash. They surged almost another 50%, and newspapers called it the golden age. Investors kept pouring money in. Then October 1929 arrived, and the Dow Jones collapsed 80%. Unemployment exploded to 25%, and the Great Depression began. And that quiet inversion 18 months earlier, it was the warning nobody heeded. Since then, the pattern has repeated like clockwork. 1969, inversion. 5 months later, recession. 1973, another inversion. Then an oil crisis that crushed the economy. 1981, inversion again. And then a crazy downturn. 2006, inversion. And 17 months later, the worst financial crisis since the Great Depression hit with devastating force. Every single major recession in modern history was preceded by this signal. Every single one. The yield curve inverted in August 2022. Since then, the market has rallied. Tech stocks soared, and AI has become the new gold rush. Every company is supposed to have AI, right? And now these tech stocks are soaring. People looked at this data and said those 4 dangerous words. This time, it's different. But here's what should terrify you. The inversion we're seeing now isn't just deep. It's the deepest since 1929. And it's lasted longer than almost any inversion in history. Think about that. The tension has been building for over 2 years, and history tells us something crystal clear. The deeper the inversion, the harder the snapback. And here's what makes inversions so dangerous. They don't cause immediate pain. There's always a delay, a period of false calm that makes everyone believe the danger has passed. In 1928, stocks kept rising for 18 months after the inversion. In 2006, the economy looked perfect for over a year before everything collapsed. That delay isn't a blessing, it's a curse, because it gives speculation time to run wild, and it lets bubbles grow bigger and bigger. And when they finally pop, the damage is catastrophic. Right now, we're in that exact same window. The warning has been flashing for 2 years. Markets are near all-time highs, and most people have no idea what's coming. Let me explain what's actually happening beneath the surface. When short-term rates become more expensive than long-term rates, banks get squeezed. They borrow short and lend long. When that spread disappears, lending becomes unprofitable. So credit starts drying up, not all at once, quietly, invisibly. Loans become harder to get. Consumers lean more on credit cards, and businesses delay expansion. It's slow at first, almost invisible. Then suddenly, it's everywhere. And here's the scary part. We're living in a world drowning in debt. Government debt, around 36 trillion, corporate debt, household debt. And when the shock comes this time, there's far less room to maneuver. The medicine that cured past recessions, cutting rates and printing money, might not work the same way anymore. The debt levels are too high and the system is too fragile. Now, we haven't fully passed the danger yet, because the inversion itself isn't when things break. The real trouble starts when the curve begins to normalize again, when short-term rates start falling because markets sense something has cracked. That's when recessions officially begin. And guess what? That process has already started. The curve is beginning to uninvert right now. Think of the economy as a long line of dominoes. The inversion is the moment the first one tips. For a while, nothing happens. Everything looks stable, and then, without warning, like a truck, the second domino falls, and the chain reaction becomes unstoppable. Here's the paradox that makes this moment so treacherous. The stronger the economy looks during an inversion, the worse the crash tends to be. Why? Because strength breeds confidence. Confidence breeds risk, and risk breeds disaster. In 1929, unemployment was 3% before the crash. In 2007, it was 4.4%. Both times people said the fundamentals were strong, and both times they were catastrophically wrong. The yield curve doesn't lie, it reveals the foundation that is shifting beneath our feet. But let's remember something important. Crisis, when devastating, also creates opportunities. They force change, and they spark innovation. They also clear out the excess. The Great Depression led to Social Security and modern banking regulations. The 2008 crisis reshaped global finance. Whatever comes next will transform the system yet again, probably in ways we can't imagine yet. So here's what you can do. When the yield curve normalizes after a deep inversion, history shows us a pattern. Safe assets like treasury bonds often outperform. Cash becomes valuable again. And those who reduced risky debt early protect themselves. Those who kept speculating got crushed. Awareness is your most powerful defense. Those who recognize the signal early can prepare, and those who ignore it will become its victims. So right now we have a choice. We are standing at similar crossroads as the people in 1929. The same signal seems to be flashing, and some confidence fills the air. The same voices say everything is fine. But history doesn't forget. The yield curve has just done something not seen in nearly 100 years, and every time it has, the story that followed changed the world. And here's an important note I wanted to leave you with. Always do your own research. Never just believe what social media gurus tell you. Always make sure to verify the information and protect your assets because they are very important.